All right. Hold on just a second. Go. Does everybody hear me all right? Cool, cool. So let's crank it up, right? Welcome to Trading Coach's Playbook. As it says right here, I am Tripp Saywer. Let's take a look at the disclaimer. Of course, this is all about education, so nothing should ever be seen as advice or recommendation. No broker dealers or investment advisors here. Since it is about education, any trades we talk about should always be considered as non-funded. Of course, trading does involve risk, so we want to try and limit that as much as we possibly can. And Freedom Management Partners personnel are not subject to trading restrictions. So what's on the calendar? We've got Inner Circle, our check-ins on Monday, as usual. Next one's the 28th. Then we've got our quarterly next Friday and Saturday, August 1st and 2nd. Excuse me, 10 a.m. to 2 p.m. And then we got Mastermind Group meeting on Tuesday as usual. Next one's on the 29th. Let's see, we've got Trading You week after next on the 4th and another one on the 21st. And then we've also that week, actually it's the next week. What is that? That's like 2 Mondays from now. On the 11th, we've got Q&A with Tony for Trade Watch Alerts. Of course, we got our free stuff, Power Hour, and this Trading Coach's Playbook. Power Hour on Monday, Playbook on Friday, and then our, like what I like to call our greatest hits, Pop, E-Mini Think Tank, and Covered Call Explorer. Um, all right. And of course, our follow us page with all the cool free stuff on social media platforms, including the new one that we finally got on our follow us page here, the Trading Post. Sign up for that. It's a cool newsletter every morning. You get an email, which actually has the newsletter in it, as well as you can go look at the newsletter itself on Beehive. So, how about, of course, anybody got any questions or comments? Feel free to stick them in the old chat. We'll start as usual with our review of SPX and VIX. So let me pull this over so we can see our is that on? Yeah, it is on. Our chart for the SPX on Omega charts. And then I'm going to give you the bigger picture here, and then we'll start to shrink it down and see where we got our new all-time high yesterday. I don't have today's count. I thought I did an update. I guess I didn't. But, we started up. Let's back up just a little bit. We started up their little box of neutrality right there at the zero line and then took off again. Little bit of hesitation here. Definitely up at a slower rate. Something I showed last night in my update. Here, let me grab this real quick. I found it very interesting. Of course, here's all the different stuff. We got our SPX, Dow Jones, NASDAQ, and RUT. But on, let's look at, here, we'll do that. And, oops, not W, X. Maximize that. And look at the ATR. It's just ever since all the debacle with tariffs, which was so volatile, so extra volatile, causing the ATR to go up, we've steadily gone down. And I mean, I expect those candles to be in the, or the ATR, excuse me, to be in the, 50, 60, maybe 70 range. So 150 is extra super high, but even 54 is kind of low. So, but that happens in the summer. So we'll see. Should pick up as we get into August and definitely as we get into September. As far as the VIX goes, we've got our VIX where we are basically hanging out. We're starting to get towards the middle part of the bottom third, which is not great for sellers, great for buyers. If you are, hey Brenda, if you are a buyer, this is great. For the stuff we do, a lot of the stuff we do in covered calls, this makes it tough because we're selling for premium. So yeah, as I've said many times before, I like it better up here than down here, but it still works. And that's exactly what you expect when the SPX is moving up like it is, the VIX is pretty much a counter to it. So you would expect it to be moving down or at least staying low. So that's it for the SPX and the VIX for now. So I got a story. Once upon a time, there was a trader named Tripp, and he was in a seminar, not unlike many of the classes that we do here at Wealth Builders. It was on location back when dinosaurs roamed the earth and we could actually do on location classes. And I forget I forget exactly what we were going over, but it was earnings week, kind of like now. Google was up that afternoon, and lo and behold, on X, which used to be called Twitter, came out. The earnings came out like at noon. They were leaked, and so everybody was trying to figure out how to make a little money off of that, take advantage of that. And I got into one of my first funded trades. It was a long call, and I immediately felt sick to my stomach. Anybody ever felt that? And it started to go against me, and I got really, really anxious and really, really scared. And I basically let it just go to expiration and die. But I felt a strange sense of relief as it just expired worthless. So the lesson I learned there was how important a person's psychology can affect your trading. It's a very big part of it. So what's psychology? So Wikipedia says psychology is a scientific study of mind and behavior, includes the study of conscious and unconscious phenomena that should be taken into account, including feelings and thoughts. We've also got beliefs. Psychologists seek an understanding of the emergent properties of brains, linking the discipline of neuroscience. And as scientists, psychologists aim to understand the behavior of individuals and groups. Also, an important part when you're talking about trading. So, what about trading psychology? So, it's a little different. So, trading psychology, according to Investopedia, refers to the emotions and mental state that help dictate success or failure in trading securities. It represents various aspects of an individual's character and behaviors that influence their trading actions, can be as important as other attributes such as knowledge, experience, and skill. I would actually debate that it might be even more important. So, discipline and risk taking are two of the most critical aspects of trading psychology, since a trader's implementation of these aspects is critical to the success of his or her trading plan. You ever heard plan the trade and trade the plan? It's a really good way to do things ahead of time so you can keep out of your own way and kind of mitigate any psychological opportunities for improvement you might have. Fear and greed are commonly associated with trading psychology, while these things like hope and regret also play roles. And I would say, you've probably heard me say this before, I'm not a big believer in greed. I think it's all about fear. Now, what grew, I say that because I see greed as fear of missing out. So it's kind of the same thing, maybe the different side to the same coin, so to speak. So anyway, this is all very important in our trading. Now, when we're trading, I hope everyone has a strategy and they have done a strategy creation system around that strategy. So, for those of you that don't know what that is identify, enter, manage, exit. And this is a Rob Roy um, invention. And it says it all right there. You're identifying your candidates, you're entering your trade, you're managing your position, and you're exiting for either a profit or a cost. So now I'm sure at least some of you are going, well, this guy's all over the place. What in the world is he talking about? So let's take a look. What are we doing? So, what I want to talk about today is not only the strategy creation system and each of the steps within it, but also feelings and reactions to those steps, mitigation techniques for those reactions if they don't serve you, and maybe a little bit of group discussion if you guys, and gals want to throw in your thoughts, experiences, whatever. So let's dive in. So we'll start with number one, which is identify. So obviously, identification of your identification of your candidates is very, very important. You want to stay calm. It's a little bit easier to stay calm if the market's not actually going, but that is an emotion, but it's an emotion. It serves you, right? It's calm, very good. So yeah, make sure you have a plan and stick to it. Like I said, plan your trade, trade your plan. So something else around identification is like I was talking about before, greed or FOMO, fear of missing out. So, it can cause you to select stocks that might not be good candidates for what you're trying to do because you see something move, you see something that looks like it's going to be great, and you maybe jump into something that you don't need to. Identify that emotion, and a good way to mitigate that is meditation and just thinking out the process, especially ahead of time. So what else can happen when you're doing your identifications? How about add? What is add? Otherwise known as attention deficit disorder, ADD, ADHD. I think a lot of us have at least a little bit of this. Some of us have a lot of it. It can make you pick too many candidates. You something shiny thing, get that one, get that one, get that one, get that one. So you want to be a little bit more picky. Um, and you want to make sure you're picking it for the right reasons, right? Do you have a basket of candidates? This is a way to get ahead of this before it ever starts. Is have a basket of candidates that you like, that you know, that you trade. I've got two baskets. I got a really big basket that's like, I think it's at 89 in it. And then I've got my smaller basket of 21, which is what I trade on a regular basis. And I do kind of like pop, where if one of the 21 is not doing well, I'll put it back in the big basket and pick one from the big basket to replace it. And then of course, I've got my eight primaries that I scalp in the morning, and then I've got my scans that I use for Covered Call Explorer when I'm doing covered calls, naked puts, Wheel of Fortune, call diagonals, put diagonals, and iron condors on the rut. So I have a very set set group of candidates. So sometimes if you find yourself getting overexcited, I call it the something shiny syndrome. Breathe, relax, count to 5, count to 10. It's a good way to just kind of take a step back and then get back into it. You'll hear a lot of the same ones over and over again in some of these mitigation techniques. And of course, with all my lists, I'm always going to say something else because I'm not even going to pretend like I can come up with every single possibility for all these different categories and any of the numbers of things that can happen during these steps. So, what else has happened to you? Feel free to throw something in as we go through this if there's one that really sticks out, and we'll discuss it. So with step number two, we've got entry. We're looking at getting into the trade. Anybody ever had this happen? You hit the enter button and you immediately feel your stomach come up to here and you're like, oh gosh. Um, as I mentioned in my story to start this, This anxious reaction can be caused by many, many things. We all go through it. You're not unique, I promise. Um, do you have a plan? Are you following that plan? That's a very good way to get around this part of the emotional roller coaster that is life as a trader, right? Do you need to consider scaling in? Scaling is another trading technique to deal with any of these emotions that maybe don't serve you. Some other physical ways: breathing, relaxing, tapping. Anybody here familiar with tapping? I'll show you some resources at the end of this, and I think we may have talked about this before. But it's physically tapping on your body. It's Nick Ortner is the guy that came up with this. He and his sister have a company called Tapping Solutions. It's very powerful. It's surprising how powerful it can be in helping you just relax, just like a breathing technique. Something else with the old entry. Anybody ever get super excited? You hit the enter button and you're in and it's going and yeah. Okay. Is it going your way? Is it going way in your way? Don't get ahead of it. Follow the plan. Again, breathe, relax, tap, do some of these things to just kind of stay. You don't want to be way down or way up. You kind of want to be somewhere in the middle when it comes to your physical reactions and your emotions and your behaviors. I've heard a lot of coaches and teachers talk about trading on the edge of absolute boredom. There's some value in that. So there you go. Another thing that might happen to you at entry: stunned silence. Are you really sure what's happening? Is it too good? Is it too bad? Okay, snap out of it. Follow your plan. Again, this is where the plan comes in, can be very, very effective. Follow your plan, and maybe scaling in keeps you involved and also takes away the stunning portion of that silence. Breathe, relax, coffee maybe. Um, and then of course, something else. There's always something else. There you go. Helen says, yes, I love tapping. It's good stuff. It's really good stuff. There's always something else with with your emotions. So again, like I keep saying, I love participation, so feel free. Step three is manage. So with management, you're looking at maybe being a little bit nervous. You're in the trade, you're watching it, and you trying to manage it, and you are just tense beyond belief. And it can cause many, many things. But again, you can mitigate this with your plan. Not only having a plan, but following a plan. And if you're following that plan, no tap shoes needed, Brenda. Ha ha. We'll get into it in a minute. It is physically tapping. It's using your fingers to tap on per places on your body, mostly around your head and neck, a little bit of shoulders. And it's one of these things that somebody came up with. I can't explain it completely, but it does help to relieve things like stress and anxiety. It's kind of like meditation, only instead of just meditating, you're tapping on specific points, very specific points on your body. And the tapping solution goes through that whole thing. They've got some free stuff on their website if you want to go check it out, where you can actually go through a little 3, 4, 5 minute exercise of tapping. So it kind of shows you how it works. Um, Another way is scaling out. Now, I don't do a lot of scaling in. I do a little bit, but not a lot. I do a lot of scaling out, and most of it is around this right here. It is to help to it's to help mitigate my risk, and it's also to help mitigate my anxiety. Um, and the two kind of go hand in hand, but it's a really good technique for helping deal with that. Again, breathe, relax, tap. Like I said, you can see these same things over and over again, and it's all about knowing yourself and understanding what works. Do you need to meditate? Do you need to do breathing exercises? Do you need to do tapping, learn tapping? There are other techniques as well. Do you need to make sure that you have all the right nutrition? You got a good night's sleep? Um, when do you do your exercise and movement stuff, whatever that is? If it's in the morning, have you done it? Do you do it before the market opens? A lot of times that can help with mood as well as anxiety. So, next step in management, are you a cucumber? Are you a icy cool cucumber? So, that's good. Again, kind of like calm when we were talking about identification. Everything's hunky dory. It's unfolding the way you expected it to. Just keep watching it. Follow the plan. Always follow the plan. Whether it's going for you or against you, always follow the plan. You'll hear people say, "What's a good trade?" It's the one where you followed your plan. Even if it went against you, even if it cost you a little bit, if you followed your plan, it was a good trade. Sometimes that's really hard to get your head around, especially as a newer trader. But even in the icy cool cucumber world, you got to be ready to adjust. Something might change. You might see a change in direction before you reach your first target. Manage, manage, scale out, get out, whatever. Again, with breathe, relax, and tap. Those are my go-tos. I meditate in the mornings when I get up. You try and meditate in the afternoons after I'm done with my day. But I'm doing breathing exercises and tapping things as I need to throughout the day. Um, what about inattentiveness? Yes, I'm just messing around. Are you really not watching this? Is there something, are you bored? Is there something else on your mind? Snap out of it, follow the plan, be ready for any changes. Breathe. Do you need more coffee or maybe something like a Monster or NOS or something to really kick you in gear? But, being when I say trading on the edge of boredom, that is not in boredom, that's on the edge. So that's very, very calm. The biggest thing here is being distracted. Make sure that if you're in a trade, you're managing a trade, that you're watching it, unless it's a set it and forget it, where you have everything set up and you don't care what happens as far as the end of it all, because you have your entry, you have your stop, you have your target, you have orders in your platform for all of that, and you're just going to let it happen. We do a lot of that in Cover Call Explore, so that's okay. I'm talking more about scalping, day trading, where you're actually on the computer looking at the chart, going at it, kind of like we do in the inner circle. Oh, here we go, inner circle lab. I'm backwards right there. On Mondays, Tuesdays, and Fridays. Um, but yeah, you want to, if you're in a trade that is moving fast and you are actively managing it, you want to make sure you're paying attention, right? And of course, something else, anything else could be anything else. A lot of times, like today, I was in there, I was a little bit distracted because I was thinking about this presentation. So I did one trade first thing in the morning, and then I kind of listened for an hour, hour and a half, and then I ducked out early because I understood about myself that I was going to do something stupid that was going to cost me money because I was distracted. That's another one of those things you hear me say a lot. Trader, know thyself. Understand yourself and know that there are times when maybe you shouldn't be trading. Maybe there's something going on in the family. Maybe there's something going on in that room. Maybe you've got some other responsibility that you need to handle. So don't trade. Not trading is always an option. So, last step is exit. It's over, right? That's the phew that I had at the end of my storytelling pictures. And sometimes that's what it is. It's a matter of it's just over, whether it costs you a little, cost you a lot. Maybe you made a little bit, maybe you made a lot, but it's over and you're just kind of like, so, yeah, kind of like sometimes if you've ever let one just go to expiration and you actually felt relief when it was over, even though it cost you way more than it should have. Um, did it cost you much? Did you follow the plan? And what did you learn? Those are some very important questions to ask yourself at the end of every single trade. And again, this is the breathe, relax, but also document and review. This is where you, after the exit, after you're out of the trade, as soon as you can, you want to at least write down the numbers. Document your entry, your target, your stop, the end result from a dollars and cents and rate of return point of view. Uh, what else? I mean, obviously, a release, ah, and it could be good or bad. What happened? Was it good? Yay. Was it bad? Ugh. Just kind of release all that emotion for whatever happened. Again, did you follow the plan and what did you learn? Uh, Document and review. These are you're always going to see a lot of repetition in anything that I do because I do a lot of the same things over and over again. That's how you get good at anything. Um, yeah. What happens when you make a whole bunch of money on a trade? You know, it went your way, huh? Cool. Did you follow the plan and did you learn anything? You always want to ask yourself that question, even when it totally went your way. Did it go your way because it did exactly what you expected it to do, or did you maybe get a little lucky? It's not a bad thing. You just want to understand it and recognize it, you know. And again, document and review. How much did you make and what was your rate of return? To me, this is even more important than this one, as you've heard me say before. And of course, last but certainly not least, anything else? So I hope that everybody learned something from this little bitty presentation that I put forth. Hmm. Because that's what it's really all about. So, what did you learn? Anybody want to share? We've got a few more things to go through, but definitely, help me out. Let me know if there's anything cool that you had never heard before, or maybe something you heard a long time ago and hadn't thought about. And this kind of helped uh, 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 ping that in your brain, put it back in your brain. So here's some resources for trading mindset improvement. These are books. How to Become a Successful Trader by Ned Gandolfini, I think is how you say his name. Trading Psychology, Disciplined Trader, Mark Douglas, and Brett Steenbarger. This is all about trading psychology, all really great stuff. And then here's the Tapping Solution by Nick Ortner. That's the tapping I was talking about. It started with a book, but as with so many things, including all of these, they also have the tappingsolution.com as their website. So go check that out. I mean, obviously, when it comes to meditation, you can search meditation, stress relief, anxiety. You can search on YouTube. I like anything from Joe Dispenza. Lots of apps out there: Headspace, Calm, Serenity, Prana Breathe, etc. When it comes to breathing, there's an app called Breathe. There's an app called Breathwork. Wim Hof also has an app. definitely go check out the Wim Hof method on his website if you want to get really deep into breathing. And it's not just it's, let me see, how do I put, there are a lot of different techniques that can accomplish different things. You can energize yourself, you can calm yourself. I think the military teaches box breathing, which is breathe in for 4, hold for 4, breathe out for 4, and wait for 4. So you do 4, 4, 4, 4, 4, 4, and you just keep doing that. And that is a really good way to calm yourself if you need to calm yourself. Also, some of the biohackers and information brokers when it comes to the body. Love Tim Ferriss. Andrew Huberman is awesome. The Huberman Lab. I just can't recommend that one enough. Andrew Weil, Tom Bilyeu. Lifehack is a good organization. Ben Greenfield, Dave Asprey. These two are more about biohacking, especially Dave. And Gary Brecka, who's also into the biology of the human and also some biohacking. So, and there's lots of others. These are just some of the ones that I check into regularly, almost daily on some of them. I'm probably going to check out something from Dave and something from Huberman almost every day. So, there's some resources for you to use. And of course, we like to follow the slideshow portion every time with some fun slides. So how about if you are not where you want to be, do not quit. Instead, reinvent yourself and change your habits. Kind of like we talked about several weeks back I think that was my first training coaches playbook, Habits and Resources. And one of my favorites, anybody know who Jimmy V is? The coach, basketball coach from NC State, who passed away from cancer many, many years ago. He did a very tear jerking speech on at one of the very early ESPY awards, which they just had not too long ago. And he said, "Don't give up. Don't ever give up." That's him in that speech. I think that was the last words of that was the finishing words of the speech. Um, awesome stuff, but words to live by, you know. I think I've said it several times recently in classes. One of my favorite quotes from Winston Churchill: "If you find yourself in hell, don't stop." you know. So yeah, just keep going. So here's our old disclaimer one last time. And that's it for the slideshow portion of today's entertainment. So now we'll get to the good stuff, right? Who has candidates that they would like to look at? And as Rob says in Power Hour, if you give me more than just the candidate, like maybe what you're trying to do, that can help me give you uh, uh, um, better ideas. Now I know somebody's going to want. Let's go look at this. So we've got. Here's the SPX. Of course. Oh wow, all-time high. How about that again today? Let's go look at Yield Spy. And lo and behold, same exact uh Fibonacci. But it's the same thing. It's getting up towards that minus 50%, which is probably the target. As for getting into a trade right now, it's way away from the 8. It's not quite to the 50. Might want to wait on this one a little bit. If you're already in a trade, maybe you're starting to look at taking a little bit off of it, especially if it expires today, which for those of you that don't know, there are SPY options out there with expirations for every trading day. Yeah, me too, Brenda. Brenda says she was hoping for a pullback. We had our little pause here and another one here, but I'd like to see a little bit more than a pause. I'd like to see kind of a pullback in the market in general, whether it's the SPX or the Nasdaq. Um, the rut's collapsing right now, but you know, I don't know. I think it would make me feel like the move up was stronger if we had more of a pullback and a bounce. So, um, the Qs look very much the same, do they not? So, yeah, we've got we're a little bit closer to the 8. We are at that all-time high. I do not have a Fibonacci on this chart, but if we go, whoops, if we go to here, lo and behold, looks pretty much the same, which is to be expected because there's a lot of stocks that are in both. And yeah, Brenda, yeah, they need a rest and then a bounce. It's kind of like running a marathon. If you just keep running, eventually you're going to run out of gas. You gotta at least tap the brakes a little bit. Um, take a breath, recharge. Exactly, exactly. Same thing with the Qs. I mean, it's from a Fibonacci standpoint, they're kind of in the middle of nowhere. That's a big level though. So you're probably going to put uh, a Fibit in there somewhere ish like that. So you would see you'd see a nice trade Wednesday, Tuesday, Wednesday would be an entry. And these are for more like swing trades, which I'm not doing a whole lot of now. Um, you know what? Well, if nobody wants to give me some candidates, we're going to go look at my candidates. So this is my call it my quad pack, even though there's 6 charts, yes, but the quad is the ones that I watch a lot. IBM, which is usually more of a day trade, and then we've got AMD, Micron, Roku, and Nvidia, which are my scalps. I keep Amazon on here, but I usually use these two, especially this one, to maybe go look at an Avago or an Apple, which I only trade to the downside. And those of you that know me know why. I am not a huge Apple fan, at least from the standpoint of the company. For a long time, I wouldn't trade Apple at all because I didn't want my own psychology to get in my way and make me do something stupid. But then somebody said something, and I don't remember who it was, but they kind of felt the same way. They didn't like a company, so they only traded the downside. And I thought, I think I'm going to steal that. And so I will trade the downside of Apple because I have no problem with Apple stock going down. But I won't say never, but as close to never as you can get, do I never trade Apple to the upside, And I miss things like this. And that's okay. When you miss trades, that's okay. It's not a big, huge deal to miss trade. It's not. Tell you what, let's take a look at this. Let's auto zoom and oh, wrong button. Maximize. Here's AMD. Anybody see what AMD did this morning? Ow! And I missed it. And I'm okay with it because I missed it. Yes, exactly, Brenda. Brenda says she's learning. There's another one around the corner. There's always another one around the corner. And I missed this one, even though AMD is one of my faves. That's 10 o'clock. I pretty much I was done at that point. Um, but and these are not regular candles. These are Hakanashi candles. Let's change these into regular candles. So those are regular candles, and these are Bollinger Bands. This is a parabolic SAR, which stands for stop and reverse. Can be a reversal point. Um, and we've got an 8 moving average, a 13 moving average, and a 20. Instead of using a 21, I use a 20 as part of the Bollinger Bands. The Bollinger Bands are two deviations up, two deviations down, and a moving average of 20. I believe it's a simple, actually. Um, yeah, it is. It's a simple. And so I use that as its default. And so instead of having a 21, I go with the 20 because it's close enough. And this is how I'm trading in the mornings. And you can see back here we had a moving average cross. It was that was an opportunity to get in, but the RSI was kind of low. I'm not a fan. I want that RSI up above 60 for a momentum trade. And it got up there, but look at that. One, two, three, four, right there. Bang, 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 bang. Right as it pops out, we've got our Bollinger Band starting to spread out. We've got our candle popping out of that little candle box right there, and our RSI is breaking out of 60. That's the trade right there. And really, the whole thing is the trade, but that's the entry. And you look at that, that is about 165 up to one. That's a $2 move. That's a nice little move. And how many minutes? Well, we're looking at a 2 minute chart. So how about 10? How about a $2 move in 10 minutes? So this is the world of scalping. This is where it gets you. This is where you have your fingers on the keyboards or on the mouse, and you're actively managing that trade. Like with me on my scalps, I have a stop. I have an emergency button for a stop that I put in with my order, but I am usually out of the most, if not all, of the trade before it comes anywhere near that, because I'm scaling out. I'm scaling out as it goes up. Like I'm probably depending on what the rest, but depending on what the option chart looks like, I'll show you. Let's take a quick look at that. I don't want to give away too much of this because this is inner circle stuff, but this is the way um, this is the way I like to scalp. Um, and we'll just do Qs. I have an option chart right here. So let's say that's 5 minute. That's one. That's two. Let's just say for exercise, we're getting in right down here at the bottom because we're that good, right? So we're looking at, we'll say, and I usually for scalping, I'm using at the money, but we'll do in the money. So we'll say 564. So we want to do the Qs for today, and we're looking at a call at the 563. How about that? So this is a chart of the actual option. So right here, you can see it going up, up, up. I'm going to zoom in on this a little bit so you can kind of see what I'm talking about. Right there, I trade a lot. When I'm scalping, I'm trading off of this stuff. I do not have the parabolic SAR usually on my option chart, but I do have my moving averages, and this is the theoretical value of the option. So note if it's that far away, then we're doing okay. That's where it can get to. When it's underneath, it means it's overvalued. You kind of want to watch out. But like for me, I might scale out of a contract here, there, here. That I mean, every time I hit a red candle, I might scale out of something. It just kind of depends. Like with the Qs, it's a little bit different. I trade the Qs a little bit differently. If we were to do, let's take a look at that AMD. Um, and that was where? What's so that was 162. So let's do AMD call 160. Let's do a 160. So and you can see it was around 10 o'clock when it popped. And there it goes. I might scale out. Let's say I get into 8 contracts. I might scale out a 4 right there just because. I'm gonna ride this up. Now, I'm not sure what this candle did during trading. It could have gone red, but this one was red probably a lot. I'm probably going to scale out there, probably going to scale out there and exit here. So it's real easy. And my stop's down here. Even if I'm actively moving maybe I move my stop from down here to the 13. Like I'll scale out here and move my stop to the 13. And then maybe up here, if it keeps going, I might scale out here and move my stop to the 8. Well, even if it's at the 8, I'm out before it gets there. That's just my emergency. That's my emergency parachute. That's the second parachute when the regular one doesn't work. So that's how I'm scalping. And it's really effective right now. The market that we are in right now, scalping works for me, and I like it. I like it a lot. It gives me a very good balance. Like I'm scalping in the mornings for an hour or two, and that gives me the rest of my day to do other things. And then on Thursdays, I'm doing my update for Cover Call Explore. And then on Fridays, probably after lunch, I start looking at all my positions and okay, what's setting up? What are we going to get into? What do we need to get out of? I might be getting out of things Friday morning, but I'm definitely getting out of things from the week before Friday afternoon. And then, setting up, looking to see what's setting up for the next week. Um, and so that's more of my longer term stuff. So those are more, they're, they can be week long trades. Some of them are over on Monday. Some of them don't start until Tuesday because waiting for a pullback to the 8 to get an entry. So it just kind of depends on that. Brenda, so what I do is I use a 1 minute, a 2 minute, and a 5 minute. The 5 minute is just kind of to give me an idea of what Brandon calls the field of play. What's my perspective, my larger perspective, and these are not by any means, they don't multiply by 3, 4, 5, so they don't enter into that. But this is my perspective. I am looking for entries on the 2, and then I am looking to maybe refine an entry on the 1, and then I am managing my trade on the option and the 1. Hey, there he is. Hey, Brandon. I have learned I have learned a lot from Brandon. He's a great teacher. So yeah, it's just it's one of those things. Um, thanks and you're welcome, Brandon. Um, it's one of those things where you want to kind of dance with the market. I love the phrase, and you may have heard me say it before. It came from Ryan Litchfield. I learned this from him many years ago, dancing with a gorilla. And that's what trading is. You are dancing with a gorilla because regardless of whether you think you're leading, you're not. So you just better keep up. And you want to dance with it. And the market's always changing. So you've got things where you might have a market that's great for credit spreads. And then something might change, whether it is geopolitical or nationally political or economic or who knows what. Something crazy that maybe like COVID-19, makes a huge change. So then you go to day trades and even to scalping. And then as it opens back up, you maybe kind of like what you're seeing in pop now, you're seeing some opportunities for more swing trades, which really weren't there. Almost all the pop trades, I think, were day trades at the end of last year and the beginning of this year, but we're starting to see more swing trades because the market's starting to shift a little bit. A lot of the political stuff, at least from an election standpoint, is over. You've got a lot of the trade stuff. It's still volatile, but we've all kind of become accustomed to it. So it's a known volatility. So it kind of eases up a little bit. The market in general is very bullish. So, you know, yeah, no kidding, Barry, no kidding. Um, and the other thing is with economics, it's not necessarily moving in the direction that I would prefer because I would like to see some of these numbers like inflation come down a little bit more, but at least it's not really going up. So, you know, take it where you can get it, right? So that's where you want to be able to do a lot of different things. And as I've gone through my journey, I remember when I started, when somebody said the word scalp, I broke out in hives. I thought I would never be able to do that. And now it's one of my favorite things. So it's just a matter of, again, getting out of your comfort level, learning something new, and getting accustomed to it, adding that tool to your toolbox so that you're able to scalp, to day trade, to swing trade, even invest, long term invest, so that you're able to do different strategies and different setups, whether it's buying long calls and long puts, doing credit spreads, debit spreads, iron condors, doing switchback setups, doing Fibonacci four-step setups, doing using pivot points, um, um, doing power hour setups, which is different than the teaching session. So yeah, there's so many things out there, and having all of those allows you, number one, when you learn how to do them, you learn how to identify them and where they happen. So when the market changes, you see it. The other thing is you now have a new tool to use for that changing market. So yeah, lots of stuff going through my head right now because there's a lot involved in all of that. But the biggest thing is just to make sure that you have, and for those of you just starting out, let me back up a step and say, don't don't see a squirrel, don't see the shiny object and go after it. Find one thing that really, really speaks to you and learn it and master it. And it can be as easy as long calls and long puts. That's the same strategy. And it's one of the easiest ones to learn. The other ones kind of build on it and become more complicated. But say that's the one you want to learn, that's the one that speaks to you. Learn it, master it. Once you've mastered it, now it's time to say, okay, what's next? And maybe look at, let's just say credit spreads. So you get into credit spreads, you learn it, you master it. Now you've got two tools. Maybe you want to learn a scalping strategy of some sort. Find one that you like, learn it, master it. Maybe you want to do iron condors on the SPX with Brandon Wendell every afternoon. That is an awesome trade. And that's one of those things you have to understand the iron condor, but you also have to understand the market, what it's doing towards the end of the day and that kind of stuff. It's sort of a scalp. It's sort of a cross between a scalp and a day trade. Uh, but it's its own little thing. And I've noticed there's a lot of stuff out there on zero DTE trading. That seems to be very popular now. Um, but Brandon brought it here a lot earlier than I saw it all out there. So yeah, good stuff. Very good stuff. And you can learn that one. Learn it, master it. Now you've got another tool in your toolbox. And as you go, it's a journey. Remember it's a marathon, not a sprint. So you want to pick up things through your journey and understand. Maybe you want to spend some time learning about your own psychology. Maybe you want to, let's do this. Let's go pop into here real quick and go all the way to, maybe you want to read this book, How to Become a Successful Trader. There is a survey, a set of multiple choice questions in the back of this book that will help you determine what kind of a trader are you. Do you like short-term stuff? Do you like long-term stuff? Do you kind of like both? What kind of a trader are you? Are you a systems trader? So that might be a really good place to start and learn about your own psychology, because when you know thyself, trader know thyself, then you understand, hey, I can get a little anxious. Maybe doing long-term investing is not for me right now. Maybe a week-long put diagonal is not for me right now. Or maybe I like slow and steady. And so I can do a week-long covered call, and that works for me. Whereas these 4 minute AMD scalps don't work for me. So you know yourself, you become more successful by doing strategies and setups that mesh very well with whatever your psychology is. So there we go. Bring it all full circle back to psychology. Does anybody have any candidates? One last call out for candidates. And otherwise, okay, there it is. I knew Brendan'd have one. Thank you. Let's do we'll just do regular six pack and do GLD. So Brendan wants to look at GLD. So here is the daily on GLD. A little bit gappy. So, but yeah, that's not that surprising to me for gold. This is the gold ETF from State Street. Let's see. It's kind of, let's do this. I want to look at a bunch of times. So we're like so many other things. We've got this all-time high back in April, and we're kind of hanging around up there. Let's look at this year. So we've come up and just about hit it. What is that? 13, 17. So we came within 3 cents of it there, and we came within $3 of it there earlier this week. So yeah, it's very sideways. This might be a good candidate for something, excuse me, something like um, a covered call, or maybe a channeling strategy where you've got up and down and up and down, up and down. But the one thing I don't like all these crosses of the moving averages for me. But as far as, let's do this. Let's draw ye old Fibonacci right there. Is that big enough? We've got 7. Our ATR is 3.5, so that's just about right. So where we are sitting right now, let's zoom in a little bit. We're right there on the Fibonacci level on the 236. So yesterday we were kind of in the middle of nowhere, so there wasn't much of a trade. Here we've got, if we, let's say that the end of the day, this could be a nice switchback setup, but it's obviously a much better setup to the downside, because you're going to run into some resistance with the 8 and the 21 above you. So that being said, maybe this would be good for a downside strategy of some sort. With the sideways, though, let's with that much sideways, that might actually be a nice iron condor setup. So you got a lot of different things you can do with that. But as far as with what it's doing right now, it's kind of in a switchback position. So we could see either, but the upside is going to be a little bit tougher with that resistance up above it, because it is in a bearish bias, even though the trend is much more bullish. So yeah, just that one's kind of a maybe trade carefully. That might be more shorter term. Um, on the same idea, let's take a look at this. So if you're interested in golds, anybody look at TLT or any of the bonds type stuff? This is the 20-year treasury bond. And let's see. what do we have here? So that's, yeah, that's 3 year. So as you can see, it's steadily been going down. It kind of, last year, it kind of channeled up, down. But for right now, we're in the bearish. I mean, we kind of came back up. We beat this swing high, but we didn't beat this swing high. And then we fell back down again. And that, I believe, is where I have my Fibonacci. I've been watching this one because of where we are in the debt cycle, which is more about economics than but it definitely does relate to trading. Trading is kind of a marriage between economics and psychology, right? So we've got, let's see, we've got this downward push, and then we're just kind of we're channeling, but the channel is getting smaller and smaller and smaller. So it's really more of a triangle right there, where you've got your support line just below the zero on the Fibonacci. And I've been watching this because I'm just really interested to see where it goes. Like today, um, it was on yesterday's list for a put diagonal, and yet boom, it popped. So no entry there. Um, but it still hasn't gotten above this swing right here. If it gets above this swing right here, if it gets up to this Fibonacci level, we might have a break, at least a short-term break. So, this is another one of those that I like to watch, more about economics. This is where I follow some things that I don't necessarily trade, but I follow them so that I have my pulse on other pieces of the economy so that I might be better prepared for some sort of flip. Um, so yeah, other ideas of things to do, right? So that's it for today. It is 1:02. Sorry, Andrew, I kept you a couple minutes late, but we're all good here. Definitely come check me out and Cover Call Explorer. And if you're interested, definitely give somebody a call about Mastermind or Inner Circle. Those two are they've changed my life, seriously. Um, so and kind of helped me to become a teacher as well as a student. So there you go. All right. Thank you very much, Brenda. Happy trading to you as well, and to everybody else out there. And my favorite saying, trade disciplined, and we'll see you next time.